Hello everyone. I bet nobody has told you about a sneaky form of tax, which is government debt. Most of you may be familiar with income tax, and some of you, if you're wealthy enough, you may have encountered capital gain tax or asset-related taxation in general. It's not immediately obvious how the government debt will affect us. It is a less visible form of wealth transfer between generations. In finance, we often assess government debt as if it is a person. Many people talk about debt to GDP ratio. It makes sense because it's trying to gauge the government's ability to generate tax revenue. Sometimes you hear the words budget, surplus, or deficit. It is essentially a cash flow indicator. Sometimes the government owns assets, for example, most often utilities, resources, or land. These assets could be used as a collateral, meaning that if the government fails to repay the principal or the interest on time, the lenders can seize this asset. Unlike us regular folks, the government rarely pays off its debt. As long as the local economy keeps struggling along, the government will be able to roll over its debt every several years. At the other end of the equation, the beauty of the financial industry is that the buyers of the government bonds are, in fact, managing other people's money. For most of the time, their career doesn't last long enough to see these bonds getting repaid. But where did this debt come from? The most obvious reason is infrastructure spending. Infrastructure spending tend to be extremely heavy loaded at the beginning, but the project return periods tend to last for several decades. In a welfare state, it may be the public education, pension, or healthcare. Of course, sometimes the spending is for less noble reasons. There can be a wide range of things that sits on the government's tab. The most important to note is that this spending benefits the generation in power. The question is who is footing the bill? It tends not to be the same group of people. If it goes on the government's balance sheet in the form of debt, it's generally not the same group of people. Let's say, if the government never pays back its debt and continues to roll over its debt, but still it has to pay interest, right? And this interest payment lasts for many years after a spending spree. The economy needs to keep growing, or otherwise the public assets can go into private hands. Imagine what happens if all local utilities end up in private hands. They can pretty much do whatever they want to your utility bill. They are what we call natural monopolies. And how fast your utility bill grows really depends on how quickly they want to cash in. When your government issue new debt for whatsoever reason, do they consult you before they make a decision? Of course not. For a lot of times, the decisions were made before you were born, even when it comes to more tangible assets like infrastructure. The story isn't always rosy. Infrastructure ages over time. It does that slowly, but it does. At the same time, the technology upgrades are still happening. Urbanization is complete. There is no incentive for the local governments to invest in new infrastructure. Today, take a look at China's shining new high-speed railways and wide asphalt roads. This is what you can get if the infrastructure boom takes place in the recent 10 years. Compare that to Japan, where the infrastructure boom happened between 1960s and 1980s. Their infrastructure are extremely well maintained, but still, because new investment is no longer needed, you can argue that the younger generation could enjoy much better infrastructure if the public spending spree took place today rather than 60 years ago. What is worse, the young generation not only pays the interest, the maintenance cost will also rise over time. Not only because the infrastructure will age, there's also an element of inflation coming into play as well. The cost of this investment is spread out over decades, and sometimes even hundreds of years, while the usefulness of the infrastructure actually deteriorates over time, sometimes to the point of obsolescence. Unfortunately, there's little we can do to change what has already happened. I hope this video helps you to understand the challenges faced by young generation today, and also one of the many reasons why wealth distribution gets worse over time. For most developed economies, the public spending spree took place straight after the World War II. The investment will give what we call multiply effect to the generation at the time, meaning that the public infrastructure investment significantly improves their standard of living and also the public utilities, as well as their own income. But the cost is borne by generations of young people afterwards. Government debts tend to be a slow burn. It is easy to be ignored if you only focus on the present. In economics, the definition of free rider problem is a type of market failure where the people who benefit from utilities, public resources, and common use goods do not pay or underpay for them. When I first encountered this concept in A-level economics, I didn't realize how widespread the problem is. Look at the level of government debt around the world today. We are all free riders in some way and victims of the past. If you enjoyed this video, please give it a thumbs up. Or if you like similar content, please leave a comment below. Thank you very much for watching. See you next time.